Hello, I'm Alan Kohler, founder of Eureka Report, which is now part of Intelligent Investor, finance presenter on ABC News and a columnist for the New Daily.
And I'm James Thomson, senior Chanticleer columnist at the Australian Financial Review.
And we are
The Money Cafe.
Not in the cafe this morning, James, but good to talk to you, as always.
I'm missing my hot chocolate, Alan.
Yeah, I'm missing my latte. But anyway, let's press on. Now, listen, you don't think you're going to get away with not telling us the results of your playing this game called Crystal Ball.
Yes.
Which, well, firstly, you need to tell us what it is, and then, because you said in your piece this morning that your columnist's results were too embarrassing to share. Well, I'm sorry, mate. You're going to have to share them.
Yeah, so I just should explain what this is. It's a thing. It's an online game put together by a company called Elm Wealth, and it's called the Crystal Ball Trading Game. And what they do is show you 15 front covers or front page ones from the Wall Street Journal, and you are able to bet. You have $1 million, and you're able to bet on the direction of the S&P 500 and the 30-year bond price. And you can leverage up those bets. So you can,
and this is the day after
the
Wall
day
Street
after,
Journal
yeah.
front
So
page, right?
You're getting you're getting the news the day before, and you've got a theoretical time advantage on everyone else.
And how much can you lever them by?
You can lever them up by 50 times, and you can go short or long.
Right.
And so, yes, it's quite a challenge. So sometimes it's sort of obvious and you can make some good bets, but a lot of the time the market moves in the opposite direction to what you think. So I started with $1 million, and I think I ended up with 166,000. So that's and I think I do the news part at least for a job. So
you made a small fortune.
That's right. I turned a large fortune into a small fortune. So, but it's a really interesting game.
Can anyone do it?
Yeah, it's free to play.
So how do you find it? Just
Google Elm Wealth Crystal Ball Trading Game and have a play. You might have a couple of goes and get the sense of what you're trying to do. But yeah, it's interesting. I mean, I think, as I say in the piece, it's not investing; it's trading, and trading's really hard. But
what's the serious message from it, do you think?
I think there's a couple of serious messages. One, markets don't always respond as the way you think they will respond. Two, having a time machine isn't as helpful as you might think it is. Three, it's getting the size of your bets right is important. So you get shown these 15 front pages. You can decide not to trade at all. And that when they've had professionals do this, the professionals do better because they choose not to trade on days where they're not quite sure of what the next day's outcome is going to be. And then when they are surer, they are more confident about what the next day's outcome is, they bet big. So that's probably a little clue for people. But yeah, so I think the sizing of your bet is important. And yeah, I guess risk management would be the other thing. It does prove that you have to be invested for the long term. Making big bets on one day's outcome is really tough. It's much better to be thinking long term about this stuff.
Does it also tell you that the Wall Street Journal is not as influential as they might think?
Yeah, maybe. I think it tells you, not to pick on the Wall Street Journal, but the value of news isn't. We probably overestimate the value of news. There's a lot going on in the market.
Yes,
but it's an interesting experiment, that's for sure.
Well, maybe our listeners can have a play at it and tell us what how they went. That'll be interesting.
Maybe we can try and chuck it in the show notes or something like that.
Well, speaking about trading in the markets, we're now into the third year of the bull market. It was the anniversary the other day, which was I think it was October the 15th or something that
the 12th,
the market started going up. This is the US market, and now it's obviously followed suit. But I had a graph on the news that night showing that just showing the ASX 200 versus the S&P 500 over those 2 years. The S&P 500 was up 63%. The ASX was up 23%.
Yeah. Tough. There ain't no Nvidias or Microsofts here. and that makes it a bit tougher, I think. Really, it basically comes down to that. So few companies have powered the index in America.
I mean, mind you, the compound return over 2 years from the ASX is not too shabby. I mean, it's like taking in dividends, so total return, I calculated to be between 15 and 16% per annum. So that's that's a lot.
Yeah, totally.
But it's totally. Still not.
We've had a good couple of years. Does it run into a third year, Alan, or what do you think?
Well, for the moment, it's looking like that. I mean, I don't think the market is in a bubble in the sense that it's kind of like it was in March 2000 or something, because the earnings are there. The earnings from these companies are incredible.
Yeah, yeah.
And I just on that, I think it's worth just talking about your piece. No, it's actually Anthony McDonald, your colleague's piece about Australian Super's investment in a US company called DataBank, and they're quoting, the fact that they Australian Super has gone into this, spent 2 years looking at this in area of artificial intelligence and data centers, and reckons it's a real thing. This is real.
Yeah. Well, I mean, I don't think there's any doubt about it. It's definitely real. It's not. Even if you take away the sort of generative AI hype, just the movement to the cloud and other sort of forms of machine learning, that underpins the growth. But yeah, I mean, what do we sort of do? We have some challenges with power and energy and water and all that sort of stuff for the data center boom? I think so, but these data centers are going to be in hot demand. That's for sure.
Yeah, so the boom that we've had for 2 years is underpinned by data centers, AI, computers, and so on. That's what it's about, and it seems to be actually generating revenue, really real revenue, real profits. So maybe there is some more in it. Whether it's another 12 months, who knows? But it does look pretty solid.
Yeah. The gains to this point have been very strong. So whether the gains are a little bit more muted now, I'm not sure. That's an interesting question.
We need to talk about Mr. Albanese's house, I think.
Yeah. What have you made of all this, Alan?
Oh, well, I mean, obviously it's just appalling, really. Sometimes I feel a bit sort of ashamed to be a journalist, and what the media gets up to, and most of the time I'm proud of it, but sometimes I think, oh, geez, I wish journalism is not always fantastic.
Well, so you think it's unfair to criticise Albanese, or?
Oh, I think it's pretty pathetic, actually.
Yeah.
The bloke's on, what's he on, $585,000 a year. He doesn't have much. He doesn't have many expenses. Why can't he buy a house? Christ. I think it's okay. I mean, he can afford that. It's okay. I mean, other parliamentarians, including Peter Dutton, have got multiple houses. I mean,
yeah. The one thing I do, I think it's all got a bit silly, but the one thing I've sort of been thinking about in the wake of it, Alan, is this idea of it being sort of aspirational, and wondering how that sort of sits with a voter who's aged anywhere between sort of 18 and, I don't know, 35. Albo's been a public servant or similar for his entire career. And we have sort of written that there's been a few articles saying, oh, he's done well. Like and sure, he's the Prime Minister, of course he's done well, but he has been the beneficiary, like all people of that generation, of this extraordinary run up in asset prices that really has nothing much to do with how well he did or not. And I just sort of think, I do wonder about these, it's okay to be aspirational, sure, but if you're a younger person, you might aspire to that, but is it within reach? Is it remote? Is a $4.x million coastal house within reach for anyone under 35?
Well, no, of course not. That's absolutely true.
So I do think.
So what? But does that mean he can't buy it?
No, of course he can buy it. But I think it's. But of course he's entitled to buy it. Good luck to him. But I think people are also entitled to look at that and think, Yeah, well, that's a sort of generational thing that I can't, Albanese might label it as aspirational, but I can't aspire to that. It'll just never happen.
Yeah, I'm still struggling to understand what the problem is for him. I mean, I get that.
Well, I think it's just a reminder to the people he hopes, a big chunk of the people he hopes to vote to, that he's at one end of the spectrum and they're at the other.
Well, that's obviously true because he's the prime minister and he gets well paid for that, and fair enough.
Fair enough.
I mean, maybe I saw everyone saying that it's his Hawaii moment, referring to Scott Morrison being in Hawaii when Australia was burning down, which I think is a ridiculous comparison. But there you go.
But I mean, look, if you're a Labor parliamentarian going into what you know is going to be a closely fought election, do you think this is helpful or unhelpful?
Oh, it's clearly unhelpful. I'm not, I can see that it'd be better if he, better politically for the party and for him if he didn't buy it. I think that's probably right. He probably knew that too.
Yeah.
So he went ahead and did it anyway.
Yeah, and I think, I don't find the scrutiny of it pathetic. I think it's sort of a bit of an interesting moment in time. I don't think it's not a capital crime or anything like that. But just I find the way, the reaction to it, both from Albanese himself and, it's just instructive about sort of where Australia is and the problems heading into this election, that there is a generation that are going to be worse off than, the Albanese generation.
Yes. No, that's true.
Not necessarily his fault, but as you said a couple of times now, he's the prime minister. What's he going to do about it?
Yeah. Just while we're talking about politics, it's worth noting, I think, that Trump is now leading in 6 of the 7 battleground states. And those states are Nevada, Michigan, North Carolina, Wisconsin, Arizona, Pennsylvania, and Georgia. And the only one he's behind in is Wisconsin. But he's improved his polling in all the other 6, and he's ahead of Kamala Harris in those states. So it's starting to the financial markets are starting to price the Trump victory.
Yes. I thought I know we both love the work of Victor Schvetz, the Macquarie Group strategist. He had a great note on the US election, basically saying the polls have become really wonky in most elections, most places around the world, because it's really hard to get a poll of sort of what he called moderate or middle of the centrist voters. Everyone's so polarized that it's hard for a poll to capture the sort of middle or average person. So, the polls could well prove to be wrong either way still. But I noticed Victor's hope is that sort of the Congress is divided, or there's a division. One team holds Congress, one team holds the White House, and basically their legislative agendas are neutered. But his big risk is still that one side or the other won't accept the electoral outcome. So it could be an interesting 3 or 4 weeks.
Well, yeah, I've actually been having trouble thinking about what would be worse, a Trump victory or a relatively narrow Kamala Harris victory, because I think that Trump will declare victory on the day anyway, whatever happens, right? He will declare victory and then declare that the vote is rigged and the infection, that it's stolen. And from there, I think anything could happen. Yeah. It seems to me that America is in a very dangerous spot right now.
Yeah.
I mean, the stuff that he's coming out with lately in his rallies and everything is pure fascism.
Yeah, he's getting wilder and wilder, isn't he?
It's absolute fascism, including JD Vance. I mean, the stuff they're coming out with is incredible.
Yeah. No, it's one of those things, Alan, that sort of so big that it's hard to get worried about, but you should be worried about it, if that makes sense.
Okay, I'm worried.
No, I'm worried too, but it's it sort of feels so impossible to control in any way. But
and what do you make of Elon Musk getting behind him in such an enthusiastic way?
Oh, what do you make of Elon? I mean, talk about erratic. He's all over the shop. Tesla investors must be just hating this. Elon's become a sort of a political player. Has inserted himself into this in a really strange way. The sort of defender of free speech and anti-censorship is now hard right. It's a very strange sort of tilt. I don't know where he thinks this ends up. Trump appears to be no great lover of electrification, electric vehicles, the environment. So I don't know.
I know. I thought a couple of interesting things. Like the Musk did this launch of the robo-taxi the other day. But I thought what was interesting at the time about that was the putting the show on about the Optimus robot as well. And some of the stuff I watched of the robot having a conversation with people was incredible.
Yeah.
And then I read later that they were actually controlled by human beings in the background.
Yes, turns out it was a little less impressive than it looked.
That's right.
To me, Alan, you can see where Musk is going with this stuff. But he says this self-driving car is going to be ready by next year. What regulator is going to allow that to be on the roads? None in Australia.
No. But he's talking about years off anyway.
Well, yeah.
But
I guess so. But
will regulators ever allow it? I don't know.
Not sure. I mean, he says California and Texas will allow it next year. I mean, I just can't see that. But, maybe I'm wrong.
We better get on to questions.
Yeah, let's do it.
Before we get there, I need to just read a little thing here. Most episodes of Money Cafe, we get questions about ETFs. InvestSMART, who's our sponsor and owner, I guess, has just launched its first ETF scorecard. It's a deep dive into the best and worst performers over the last 12 months and the past 5 years. They've rated each ETF using their star rating system, which is basically sharing how they pick the best ones. And one big thing the report highlights is the importance of focusing on long-term performance, as what we were talking about before, rather than getting caught up in the hype of hot sectors, because today's winners could just easily be tomorrow's losers. It's definitely worth having a look at this. It's on the InvestSMART website, the ETF scorecard.
Align your wealth creation goals with ethical investing through the Intelligent Investor Ethical Share Fund. Finding businesses that deliver long-term growth while meeting your ethical standards takes time and expertise. Intelligent Investor simplifies this by offering a concentrated portfolio of Australian and global equities, excluding companies that fall short of modern expectations. Build wealth responsibly with Intelligent Investor's socially conscious approach. For a limited time, invest in ASX INES with zero brokerage fees directly with Intelligent Investor. Learn more at offer.intelligentinvestor.com.au/INES.
First question is Chris. Love the show. Regarding the upcoming Qantas AGM on the 24th of October, what chance do you think there is of the remuneration report being voted down for a second time and the consequential spill motion getting up? What do you think?
I think it's pretty skinny, Alan. My sense is that the proxy advisors are sort of relatively comfortable with where Qantas has come out on pay, and I think institutional investors feel like they've sent the message to Qantas loud and clear over the last 12 months or so. So I don't see a big probability of that happening.
No, me neither.
James says, I've got a couple 100,000 I would like to get into the market via my super fund. With the markets at all-time highs and the Fed doing their first rate cut, do you think it's fine to just dump the lot or dollar cost average into the fund? If so, how do you determine the rate at which to deposit? What would be the indications of a sustained fall in markets? There's a $64 question for you, Alan.
Yeah, that's right, James. We got no idea what the market's going to do. So if you're concerned, it's really a question of what you think James, I mean, if you're concerned about it being too high, you might want a dollar cost average, which basically means delaying some of your purchases, and just putting a portion in each month or something. As to the rate, well, again, you can choose. You could do it. You could do it once a week or once a month or once a quarter.
The one thing I'd say, we don't know how old James is, Alan.
Yeah, that's true.
He's going to be holding. Well, let's presume he's 40. I mean, he's going to be in this super fund for another 20 years. Like, I wouldn't panic too much about, trying to time the market, given that your time horizon's so long.
Yeah, exactly. That is obviously the case if he's young. Yeah, totally. Peter says, seems unlikely the shareholders won't approve the Arcadium takeover given the generous price of $8.75. So, interested in your thoughts as to the significant price difference between the offer price and the current one.
And Alan, I'll just bring in a question down the list from Sarah, who's a long-time female listener, and credits the Money Cafe with giving her confidence to invest. She's been on the lithium roller coaster, and she's asking, how does the compulsory takeover for cash work at Arcadium? Does she just get a cash payment for the shares eventually, or does she need to sell them when they're on a high after all this acquisition talk?
Yeah. Well,
so to try and answer both, I think the gap is just a little bit of uncertainty about the deal getting done. I think that gap will close as Arcadium shareholders vote. I don't think there's much chance that they won't approve it. It's an all-cash bid, and there's if you want to stay in the lithium game, there's plenty of other options. So I think we'll see that gap narrow. And to Sarah, you don't need to do anything. If you're in favour of the Arcadium takeover, then you can just wait, and you'll eventually get paid the full whack for your shares.
Yeah, that's right. I mean, I think part of the reason for the gap between the takeover price and the current share price is that it also includes a bet on the currency.
Yeah.
Which is a little unusual. So. Yeah, I mean, I think the market might be thinking the dollar will go up, or at least there's a currency risk in there, so they're pricing that in. The current share price is $8.30, so the difference is about 44 cents. So yeah, I mean, it's up to you. Do you want to take the $8.30 or wait for the $8.74?
Yeah.
Or it's actually $5.85 US, and the thing is that you don't know what the exchange rate's going to be at the time.
Yes, very true. Darko says, is there any solid evidence for a case? Is there any solid evidence for the case for an interest rate rise? As much as it hurts in the short term, I'm of the belief it would be better for us long term in the current climate. An increase could possibly decrease borrowing power for housing and maybe stall the house price growth, and would increase costs on business, which possibly limit wage increases that fuels inflation. It doesn't feel like there's much case for a rate rise, Alan, but the RBA hasn't completely ruled it out.
Personally, I think there's absolutely no case for a rate hike, and I don't think they'll do it. No,
I don't think there's any chance of it. More likely, as I think we've said on the podcast a few times, that they just keep rates higher for longer.
Yeah,
they don't cut until well into next year.
Gareth Aird at Commonwealth Bank is pretty convincing in a piece this week, saying that they'll cut in December. He says that inflation basically is licked. It's over. So yeah, I don't know. I mean, I thought that was a bit convincing. I think that's more convincing than the people who are saying that there'll be rate hikes.
Yeah. Yes, fair enough. I think December's optimistic, but maybe February next year. Still my call. Sunita
says, with recent controversies involving Woolworths, Coles, Qantas and Live Nation's impact on the Australian music industry, how can shareholders drive companies to prioritise ethical, community-driven practices while still ensuring responsible profits? What concrete actions can be taken to hold corporations accountable for balancing financial success with their responsibilities for the communities they serve?
Yeah, tough one, Sunita. There's a few things you can do. The first one I'd say is turn up. You can turn up to the annual general meeting, as our great friend Stephen Main does, and ask some questions. It's a chance to lob anything you want at the chairman, the board, and the management. So that's one way. The pricklier the question, the better. It's still the best way to get a direct answer. The other way you can do, you can write to the board and raise issues. The other way that's been effective recently is by lobbying your super fund to lobby on your behalf for some issue. Now, that's a bit indirect, and what does one voice do? But it has it does alert your super fund to the way members might be thinking. They might do a bit more research to get a bigger group of members' thoughts. But yeah, those are the two main things I'd be thinking.
The other thing to bear in mind is that these companies do keep an eye on social media.
Yeah. Yep.
So if you went at them on Instagram or Twitter or Facebook or something, they will see it.
Yep. Well said. Well said. Mark says, having just retired at 59 from a lifetime in the gaming industry and never to return, and not much good for anything else, Mark says, I only have enough money to last until I'm 60, but the legislation and the trust deed of my SMSF wording is that I need to cease employment after the age of 60. Reality, I ceased before and due to other illiquid assets won't qualify for Centrelink, so it is crucial that I get access to super next year. Can I do something compliantly, as would be common sense, or do I have to set up a sham business and retire it after it from turning 60? Mark, I think you're going to need some individual advice there.
Just worth just mentioning, Mark, there is a page on the ATO website that advises people how to get early access to their super. And the one that would possibly, you can do it if you've got an illness, a terminal illness and so on, or if you're really sick, but you can also do it for financial hardship. Now, I don't know whether financial hardship would allow you to have illiquid assets, but if you're genuinely suffering financial hardship, I think you can appeal to the ATO and they'll let you do it if they think you're genuinely in hardship, which it sounds like if you've got enough money to last till 60, you might be.
Yeah, good point.
Mark says, with online brokers, discount or free brokers that allow tiny purchases, are they as secure as traditional brokers? Do you really hold title of the shareholding? What if they, as a company, are stretched and their lender calls in all assets like the Storm?
Storm Financial, I think.
Storm Financial, yeah, right.
Yeah. Storm Financial was a different kettle of fish, Mark. That they were using margin loans and other instruments to gear up people's investments, and that's where things went bad there. Yeah, I don't see any massive issue with title with brokers, Alan.
No. When you buy online, it's you get title of the shares.
Yeah. Another Mark says, how do we know that the people who operate an ETF won't simply go rogue and not buy the shares at all and simply leave town one day with everyone's money, just like a pyramid scheme? Who's really watching?
Oh, well, I don't think any of the big providers like Vanguard and Van Eyck and Beta Shares are going to do that. So probably
BlackRock, they're not.
Just probably don't go with a Nigerian provider of ETFs, I'd suggest.
Yes, but I think you can feel pretty confident with the big guys.
Lindsay says, is there any chance that the various share registries and companies could get together and standardise their dividend statements? Computershare has some consistency because they all use the same terms for each heading and use the same font. Link has participating holding on Orica and shares held on Macquarie. Boardroom's layout is easy to read. Gee, this bloke, he's all over the place. He's got a lot of things going on there, Lindsay. Call me old-fashioned, he says, but some consistently would be appreciated at tax time. So let's take that as a comment.
Yeah, no, fair enough. Liam's got a really interesting question. Emailing after listening to last week's discussion on housing costs. I work in property development, and lately we're finding wherever we need to build public infrastructure, the council demands a 150% bond on the works. So before we start a $1 million road upgrade, we have to give the council $1.5 million to put in their pocket until the road is done. There aren't magic profits that products that cover the bond cheaply. So in effect, we need a bigger, more expensive facility and pay interest on 2.5 million for the 1.5 million of work, which of course makes the finished housing cost more at the end of the day. What's the purpose? Council staff like to feel they have a bond policy that covers their bums and doesn't embarrass them if a contractor goes broke. But that reputation protection costs money, increases house prices, and yet no one cares because it's all a bit too dry and abstract.
I didn't know about the bond.
Yeah, well, I mean, you do a renovation at your place and you'll soon find that even you've got to contribute some sort of bond in most cases, Alan. This question's really interesting to me because it's council election time here in Victoria. And everyone's voting over the next couple of weeks. Alan, I got my. I live in the Whitehorse council area. I was fascinated to get my sort of one pager with the platforms for all the councillors. Not one mentioned housing affordability or housing supply, and in fact, a couple mentioned inappropriate development. So, I mean, just linking to Liam's question here, it does raise a question for me. Do the councils get the problem of housing affordability and the housing shortage, or is that just such a vote loser that they don't want to have anything to do with it?
Yeah, no, fair point. I think it's a vote loser, isn't it? I mean, in Victoria and New South Wales, the state government's given the councils all targets they have to meet in terms of housing lots, released, or height limits removed, and so on to allow more housing. I mean, the trouble is that they can do all that. They can release more housing approvals, or land, or height availability, but somebody like this guy's got to actually build it, And Liam's saying it's the council's making it hard, so the council's got a target, but they won't hit it if they keep making it too hard by having these bonds.
Yeah, it's a great example of the sort of unseen friction in the market, isn't it?
Yeah, that's right.
Bonds. Yeah,
maybe we should jump forward to Ryan's question.
Sure.
What are your thoughts on two things? First, do you think Australian property prices are partly driven by their use as a source for credit, especially since many find affordable business personal loans difficult to obtain? And second, is the offset account a unique feature in Australia? My German friend hadn't seen anything like it, which might explain why Australians carry more debt. Yeah, that's interesting. The second thing is interesting, isn't it? I mean, I wasn't aware that offset accounts aren't common around the world. Do you know anything about that?
No, I'm not sure either.
I mean, I think it's worth noting that, if you've got an offset account, if you had a debt of $1 million and put that entire million into an offset account, that would increase Australia's debt, or that would be a debt of $1 million, and they wouldn't count in terms of measuring the debt, it wouldn't be offset in the in the data.
Offset accounts are about reducing debt faster, really, aren't they? Rather than increasing it. That's their general purpose.
Oh, yeah, sure, that's right. But
I don't think it explains why Australians carry more debt.
No, possibly not, yeah. But still, I mean, the thing is that an offset account doesn't actually pay the debt down.
Yes.
As you put money into an offset account, it builds up the offset account, which definitely offsets your interest and repayments, but it doesn't pay the debt down. So if people are putting their spare money into offset accounts instead of paying it down, that means that the debt doesn't actually reduce. And I think it's an interesting point.
Yeah. As to whether property prices are higher because people use their mortgage as a source for credit, I'm not sure that would drive the property prices up. It might drive loan sizes up. So, it's an interesting thought, though. I mean, it is a cheap and available form of credit, the mortgage, and personal loans do require a bit more hoop jumping. So, it's a good point.
Yeah.
Maybe, Alan, we could finish with a comment from Alex, who I love this one. His favourite investing advice from his dad: the secret to reducing your capital gains tax bills is to only ever buy duds.
Well, how very true.
It's a good point, isn't it?
Well, the point is that if you are paying a capital gains tax, then that's great.
Yes.
You've made a capital gain.
Indeed.
Yes. Well, that's it for today. Thanks very much for listening, everybody. It's been great talking to James Thomson, as always. I'll be back next week with Stephen Mayne. So send in your questions and we'll answer it if you email to themoneycafe@eurekareport.com.au. Until then, I'm Alan Kohler, founder of Eureka Report, etc.
And I'm James Thomson, senior Chanticleer columnist at the Australian Financial Review.